Right now, as we speak on Friday, December 19, 2025, Trump Media and Technology Group Corp is trading at $14.57 per share, which is a massive jump of $4.10 or 39.16% for the day. This kind of volatility is exactly what people have come to expect from this ticker, but the reason behind this particular move is something that almost nobody saw coming. While most investors have been staring at their screens on Robinhood or checking their Fidelity accounts, waiting for a tweet or a poll result to move the needle, the company just completely shifted its entire identity. The immediate surprise here is that Trump Media isn't just a social media company anymore. It is trying to become an energy giant. The news that hit the wires about a $6 billion merger with TAE Technologies, a massive player in the nuclear fusion space, has turned the typical narrative on its head. Most people looking at this through the lens of a traditional individual brokerage account probably thought they were buying into a political sentiment tracker, but the reality is that the company is attempting to position itself as the primary power source for the artificial intelligence boom. By grabbing a stake in a company backed by major names like Alphabet and Chevron, they are trying to bridge the gap between political influence and the massive electricity needs of modern data centers. This is a move that catches even seasoned users of Schwab Intelligent Portfolios off guard because it fundamentally changes what you are actually owning when you buy this stock. If you look at the general belief surrounding this company, the common ground is that it's a meme stock driven by retail enthusiasm and the personal brand of the president. The expectation is that the stock will rise or fall based on the news cycle in Washington. However, the contrarian view, the one that explains this 39% move today, is that Trump Media is aggressively looking for a way to use its massive cash reserves and public market access to buy into real-world infrastructure. They are trying to move away from the tiny revenue numbers of Truth Social and toward the massive capital requirements of the power sector. While Apple stock or Nvidia stock investors are looking at chips and consumer devices, Trump Media is now betting on the literal atoms that will provide the electricity for those chips to run. It is a high-stakes play that most people didn't have on their 2025 bingo card. Looking at the recent movement on the charts, the trading volume today has been absolutely staggering. We are seeing over 70 million shares change hands, which is nearly 20 times the average daily volume. This isn't just small retail trades on a mobile app. This is massive institutional-level shuffling as people try to figure out how to value a company that just merged a social media app with a fusion energy firm. On platforms like Interactive Brokers or through SoFi Invest, the order flow is showing a lot of aggressive buying at the open that hasn't really cooled off as the day progresses. The price action suggests a major short covering event might be happening too. Given that the stock was down significantly year to date before this announcement, anyone betting against it through their Fidelity brokerage or Interactive Brokers account is likely feeling the heat right now. The momentum we are seeing today is also tied into the broader sector. While many tech stocks have been treading water, the sudden interest in energy-intensive AI support has made anything related to nuclear power or grid stability a hot commodity. When you see the kind of price movement we are seeing today, it forces a lot of people who do self-investing to reconsider their portfolios. Are you holding this because of the social media platform, or are you holding it because you think the government is going to fast-track nuclear permits? Comment below and let me know how many shares of DJT you are currently holding in your portfolio and if this nuclear news changed your mind about the company's long-term value. To understand why this move is so jarring, we have to look at what the company actually does beneath the surface. For the last couple of years, the business model has been almost entirely centered on Truth Social. It was supposed to be the conservative alternative to mainstream platforms, but the revenue hasn't really followed the hype. In the most recent quarterly reports, the sales figures were less than $1 million, while the losses were in the tens of millions. That is a tough pill to swallow for anyone using investing sites to find stable growth. To counter this, the company started looking for other ways to generate value. They explored crypto holdings and even launched some specialized funds through their own channels. But this TAE merger is on a completely different scale. The old reports showed a company that was basically a cash-rich shell with a small social media site attached to it. They had hundreds of millions in the bank from their initial public offering, but no clear way to turn that into a profit-making machine in the media space. By merging with a company like TAE, they are trying to solve that problem by pivoting into a sector where capital is everything. Fusion technology is incredibly expensive and notoriously difficult to bring to a commercial level. TAE has been at it for decades, and they need the kind of capital and political support that Trump media can arguably provide. It's a marriage of convenience where one side has the technology and the other has the liquidity and the political path forward. For the retail crowd using the Robinhood app or Robinhood Investments, this creates a very complex situation. On one hand, you have a stock that is incredibly liquid and capable of these massive intraday swings. On the other, the actual timeline for this fusion technology to produce power is until 2031. That is a long time to wait for a return on a stock that is currently being traded like a high-speed momentum play. When you compare this to more traditional choices like Fidelity mutual funds or Fidelity ETFs, the risk profile here is off the charts. It's a speculative bet on a future that is still years away from being verified. The institutional activity we are seeing today on the Interactive Brokers platform suggests that the big players are still skeptical but are forced to pay attention. You don't see 39% moves on this kind of volume without some serious level of participation. However, the tension between expectation and reality remains high. The expectation is that this merger will allow the company to tap into the massive subsidies and government interest in domestic energy production. The reality is that fusion is still one of the hardest engineering challenges in human history, and there is no guarantee that this specific partnership will be the one to solve it. Looking toward the future, the outlook for Trump media is now tied to two very different catalysts. First, there is the immediate political environment. As long as the current administration is in place, there is a belief that regulatory hurdles for a project like this could be significantly lowered. This is why people who do online investing are so focused on the news cycle. Second, there is the technological catalyst. If the joint venture can actually show progress toward a utility-scale plant, the valuation could theoretically reach much higher levels. But if the project stalls or if the merger faces legal challenges, the stock could just as easily give back all today's gains. There is also the risk of dilution. All stock mergers of this size usually mean a lot of new shares are being created, which can weigh on the price over time. Investors using SoFi Active Investing or looking for investment help through their individual brokerage account need to be aware that the share count is likely to change significantly once this deal closes in 2026. This isn't a simple buy and hold story like you might find with Apple stock. This is a story about a company trying to reinvent itself in the middle of a market that is obsessed with AI and energy. If you are looking at this through a Fidelity trading platform or checking your Robinhood cash management account, the sheer speed of this transition is what should stick with you. A week ago, people were discussing whether Truth Social could ever get enough advertisers to be profitable. Today, they are discussing whether the same company can build a nuclear reactor to power the next generation of supercomputers. The contrast between those two ideas is what creates the tension that drives the price. It's a classic example of the market pricing in a future that hasn't happened yet, based on a narrative that is as bold as it is risky. When you look at other options like SoFi ETFs or Schwab Intelligent Portfolios, you see a much more measured approach to the market. But for the people who prefer self-investing and want to be in the middle of the most talked about stocks, Trump media is the ultimate test of conviction. You are no longer just betting on a person or a political movement. You are betting on the ability of a media company to transform into an energy conglomerate. Whether that is a brilliant move or a desperate one depends entirely on how much weight you give to the reality of the technical challenges versus the expectation of the political tailwinds. For anyone who uses online investing sites to track their wealth, this kind of move is a reminder that the market can always surprise you. You might think you have a handle on a company's business model, only to wake up and find out they've changed it overnight. This is why having a clear strategy, whether it's through a Fidelity IRA account or a Robinhood fractional shares approach, is so important. You have to decide if you are chasing the 39% gain or if you are looking at the fundamentals of a company that is still reporting heavy losses on its primary platform. The institutional skepticism is likely to continue until we see actual progress on the fusion front. Until then, expect the stock to trade more on sentiment and headlines than on earnings or cash flow. The 2025 landscape is one where narratives move prices faster than actual data, and there is no louder narrative right now than the one surrounding Trump media. It is a stock that forces you to choose a side and stick to it, regardless of what the charts say on any given Tuesday. In summary, the central insights from today's movement show a company that